Liam, what are we expecting?
You know, Emily, I'd love to be able to give you and GBNews viewers and listeners, and maybe Tom too, some good news that there's going to be a pre-Christmas interest rate cut. I have to say, though, the balance of probabilities is that there won't be. Interest rates have gone up very, very steeply in recent years in the UK, of course, from 0.1% all the way up to 5.25% where they are now. They've been there since August, and in just a minute's time we're going to hear what the Monetary Policy Committee that sits in the building behind me, the Bank of England, 9 economists who set interest rates, what they've decided. I think it's pretty nailed on. They're going to keep interest rates at 5.25%. Inflation is coming down. It's come down all the way from 11.1% this time last, or at least last autumn, and now it's 4.6%, but it's still pretty high, and so I think they're going to keep interest rates where they are. But very interestingly, mortgage rates, the commercial interest rates, where we get mortgages, where we get business loans, personal loans, they are coming down quite steeply now because financial markets reckon that inflation's going to start really tumbling. It's been held. Well, there you go. Santa didn't quite come. A lot of people wanted an interest rate cut because a lot of families are suffering from much, much higher mortgage payments than they previously had because 2-year fixes, 5-year fixes have expired. You can see their interest rates have gone up all the way from those emergency levels back in 2020, 2021 in the aftermath of lockdown. During the COVID pandemic, of course, they were low. The staircase to the right, the 14 interest rate rises to 5.25%. The question now, Tom and Emily, is when will interest rates fall? I reckon we're going to see an interest rate cut if inflation continues to fall by March, maybe April, from 5.25 to 5. But for now, no surprises. No surprise also that it's raining here at the Bank of England. This is England. No surprise that the Bank of England has held interest rates, as we all expected, at 5.25%.
Liam, of course, yesterday we heard some pretty gloomy news about the state of growth in the economy. Many people blaming those interest rate rises, for doing their job, really, for depressing consumer demand. Is that going to feed into future decisions from the Bank of England? Perhaps now's the time to take that sort of squash off consumer demand.
Well, you're right. We did see the economy contract, according to figures out yesterday, contracted by 0.3%. The UK's still been growing recently. It's been doing pretty better than a lot of the countries in the European Union, not as fast as the US. The economy has been quite resilient. But look, Tom, when you raise interest rates 14 times in a row, which is what we've done, that does squeeze borrowing, that does squeeze lending, that does mean businesses invest less, it does mean consumers buy less because of their mortgage payments and their other debts that they have to service, and that slows down growth. And those interest rate rises, they often work with a lag, and they've been squeezing economic activity, and that was reflected in the figures, the GDP figures we saw yesterday, which showed the overall size of the UK economy contracting. But you're right, this is what interest rate rises are for. They squeeze out activity, so they squeeze out price rises and inflation, and we've seen that. We've seen inflation come down from over 11% to just over 4% now. Still too high. The Bank of England's target set for it by the government is 2% inflation. But the Bank of England now, as the months go by, they're not really meant to worry about growth. They're not really meant to worry about interest rates crushing economic activity. They're meant to be focused on inflation. That's why they're independent, because politicians always, they're going to want growth, aren't they? But I think that the fact that the UK economy has contracted quite sharply, that will play into their decision-making over the coming months. But it all really depends on the headline inflation figure that comes out on the 20th of December. If that figure starts with a 3, then I think people will start to believe that an interest rate cut is coming sooner than the Bank of England thinks. The Bank of England has been talking about interest rates maybe being cut in late summer or autumn next year. Financial markets think the cut will come much quicker, but if inflation comes down sharply, Tom and Emily, then I think expectations will shift and people will start looking for an interest rate cut in the early spring, and that means mortgage rates will come down. So if you are on a fixed rate deal and you have to get a new deal, wait if you can, because I think mortgage rates in the market will start to carry on heading down, increasingly so, particularly if the inflation number out on the 20th of December is a number that's pleasing, a number that's falling rapidly.
Liam, I apologise to our viewers for that construction noise that is battling against you. But Liam, could you break down...
Plenty of economic activity.
There is, that's good to see.
There's plenty of economic activity. There's no GDP contraction in the construction industry, that's for sure here.
That's good. Liam, could you break down for us again, why exactly, if the interest rate is held at 5.25%, why are mortgage rates coming down?
That's a really, really good question. Yeah, why is that bloke on the telly talking about mortgage rates coming down when the Bank of England has just held interest rates? That's because mortgage rates are set by banks and lenders that compete with each other, and they charge more than the Bank of England base rate. Of course they do, that's how they make their money. But the margin between the Bank of England base rate and the mortgage rate that they offer us, they're playing with that. They're competing on the size of that margin. It's because the banks think that the Bank of England will start to lower interest rates quite soon, and that means that they will be able to fund the mortgages that we need in the future for less money, so they can offer us lower rates now in order to get our business, so their competitors don't get our business. We're seeing mortgage rates coming down quite sharply. The average 2-year fix now just went below 6% for the first time in a long time, because financial markets are betting that the Bank of England's being too gloomy and that interest rates will start to fall sooner than the Bank of England is saying. I agree. I've been saying this for quite a few months, as have some other people who cover financial markets closely. And that's why I say again, if you are on a fixed rate mortgage and your deal's going to expire and you need to do a new deal, wait as long as you can, because the outlook for interest rates, the consensus view about where interest rates are going to go, which drive financial markets, which drive money markets, which drive how much our mortgage lenders borrow money for before they lend it to us. The view is that inflation is going to fall sooner than the Bank of England thinks. Those interest rates are going to come down sooner, which means a better deal for consumers. It's called competition, Emily. It still exists in some parts, at least, of the British economy, for the benefit of consumers.